I'm at the Exchange ETF conference. I'm speaking with Nancy Davis of Quadratic Capital, an inflation investing expert, to say the least. Nancy, tell us, what's your take on today's inflation number?
Well, it's 8.5%. So I think the whole transitory thing can definitely be put to bed. I think investors have to be thinking about how to position for continued inflation and not really taking a bet about when it's going to subside. I think the interesting thing in the number today, this morning, was that the services component is higher, and that tends to be a lot stickier. And this is also the first CPI print since Russia invaded Ukraine at the end of February. So I think we're just seeing that things are just going. There's so many geopolitical risks, especially with what's going on in some countries really shutting down in response to COVID, that we really still need to be thinking about supply side disruptions.
For financial advisors managing money, this creates a real challenge. How should they look at inflation and portfolio positioning today?
Well, I would definitely look at your credit exposure in the fund, because if you look at, like, say, the first quarter, 10-year treasuries were down over 10%, investment grade bonds were down over 8%. So I think it's really been a wake-up call in a small way for investors to say, wow, bonds can be quite risky, and especially if we have inflation or even that stagflation where we have higher prices, lower growth, which could be possible, investors should really look for diversification.
A 60-40 portfolio is going to be really challenged in that type of environment.
Yeah.
So Nancy, you've been on our ETF Stories series before, talking about the IVOL ETF, symbol IVOL. Tell us, how is that ETF constructed?
So it's mostly treasuries. 85% of the fund approximately is inflation protected treasuries. That's really important for investors to know about, because the AG index, for instance, core fixed income, which is benchmarked mostly to, it used to be the Lehman AG, then it became the Barclays AG, now it's the Bloomberg AG. That has no inflation protection in it. It has treasuries, but all nominal treasuries. So we take that core TIPS portfolio, and then we try to augment it with another measure than the CPI. CPI came out this morning. It's a consumer price index, one index. It's not the only way to measure inflation. And the problem with CPI, Jay, as you know, is a third of it is rent. It's owner-occupied rent. So we like to augment with another measure of inflation to get a more diversified measure of inflation expectations in the future, which is what I think really matters to most investors and in their portfolio. It's not what's happening today, it's what's priced in for the future.
So for people building portfolios, where does IVOL fit?
It fits in the fixed income side. It's mostly treasuries. A lot of people use it in lieu of credit. So instead of adding, very simply, if you own Apple stock and bonds also in Apple, you have a lot of corporate risk. So the reason people take credit risk is to get that return potential above governments. We don't take any corporate credit risk. We take interest rate spread risk. So it's just something different. But that's how we get that enhanced potential monthly distribution. We paid out 30 basis points every month minimum, sometimes more if we have more income left over. We paid out 50 in December 2019, 47 in December 2021. But it's just a different type of risk, and it's not something that people already have inside their portfolio typically.
Where can people learn more about the IVOL ETF?
Well, probably our fund website would be the easiest way. It's not eyeball, it's eyeball. I know that always like inflation volatility. So it's www.ivoletf.com.
Excellent. Nancy, thanks so much for coming on.
Thanks for having me back.
To see Nancy's episode on ETF Stories and all past ETF Stories, visit etfstories.com.